This is Financial Standard, the definitive source of news, thought leadership and analysis for Australian wealth management professionals. Financial Standard. Take the lead.
Hi, welcome to the Financial Standard podcast. My name is Matthew Y, and I am a journalist at Financial Standard. I'm pleased to welcome Nicholas Alley from Neo Super today for our chat on a booming investment asset in the grand scheme of SMSF. Good afternoon, Nick. Thank you for being with us.
Hey, Matthew, how are you?
I'm great, thanks. When talking about self-managed super fund, this provides, I guess you can say, some sort of freedom for individuals to formulate their preferred investment strategies to ultimately accumulate their retirement funds. This obviously comes under stringent regulation as well as significant expenses such as management fee and more. But I'm not sure if it's due to the attraction of this methodology. We are currently seeing a trend of younger entrants into this space. A possible outcome from this trend is the engagement with newer asset class in SMSF. In this particular case, crypto asset class. Nick, being a SMSF specialist, what is your thought on investing in a volatile asset class like this? Wouldn't a person prefer a more secured and risk-averse investment strategy when the fund ties with their retirement plans?
Yeah, good question. I guess a couple of things. We are seeing a younger demographic setting up self-managed superannuation funds, and that younger demographic does have a different view of investments to traditional investments. So I guess in a way, yes, you would probably want more prudent assets or more conservative assets in somebody's retirement savings account. But that's not to say that crypto doesn't have a place in self-managed superannuation funds in people's retirement savings. I guess one needs to make sure that they don't put all their eggs in one basket with crypto, because it is a volatile asset class, as you alluded to. But that's not to say that a diverse portfolio inside a superannuation fund, there's not a place for it. I think there might be a place for it, but you wouldn't be putting all your superannuation assets into crypto, that's for sure.
Elaborating from that point, what is the major incentive in advancing with such investment?
I guess the principal thing is, and this is what we've found with crypto, is it's, how do I put this? It's non-correlated, if that's a word, non-correlated or not correlated to traditional asset classes. So I guess that's one of the things, that's one of the attractions of it, is that it's not necessarily going to go up when other markets go up. It's not necessarily going to go down when other markets go down. And that's the beauty of it. It's going to be, in some ways market agnostic. It's going to perform of its own volition. It's not necessarily going to perform badly or perform well when your traditional markets like equities are performing badly or performing well. So there is that lack of correlation with traditional markets that I think is attractive for superannuants.
So when it comes to security and scam awareness, as we know, crypto assets are quite prone to these issues. What are some of the precautionary should investors consider before taking off onto crypto assets?
I would think the principal thing is get advice, seek advice. Don't go it alone. Don't, to your point, you can jump on the internet and you can find thousands and thousands of crypto assets. I think you need to seek advice. I think you need to, and look, that doesn't necessarily mean that you need to go to a financial planner or something like that. But I think you need to understand what crypto is, how it can fit in an overall portfolio, and make sure that, again, it comes back to don't put all your eggs in one basket. Put a toe into the crypto water, so to speak. And just do your due diligence. Make sure that what you're buying is actually real. It's not a scam. As you say, there are a lot of scams going around. Make sure it's through a reputable marketplace or a reputable platform. So yeah, do your due diligence. Don't put all your eggs in one basket with crypto. And I would seek some form of advice with regard to investing in crypto, because it is, even though a lot of younger people are au fait with crypto assets, it is still an emerging asset class. It doesn't have the government regulation around it like other asset classes do. So I think people need to tread with a lot of caution in this space.
Could you go over some of the complications for consumers when it comes to regulation? As we all know, this new asset class, crypto is regarded by the ATO as a capital gains tax asset? And more specifically, how would the established title of a capital gains tax asset implicate SMSF ahead of the proposed Division 296 super tax? If you wouldn't mind going into that space as well.
Yeah, Division 296, the gift that keeps on giving, isn't it?
Yeah, absolutely.
I guess one of the things with crypto is that because it's a capital gain asset, as opposed to, and I guess crypto when it first came out, it was seen as an alternative to fiat cash, to money, traditional money. Now it's become, rather than cryptocurrency, as we've talked about or used the terminology, it's crypto assets. And because it's a capital gain tax asset, when you look at Division 296, we need to look at somebody's total super balance at the end of the year. We adjust for contributions, we adjust for payments, and then we determine what level of earnings are attributable to amounts of money above $3 million. And then we apply that 15% tax. So I think one of the things with crypto is we need to make sure that the fund has liquidity to meet its potential Division 296 obligations, which again harks back to the point that we don't put all our eggs in one basket. And if we're going to have crypto in the fund as an asset class, then we need to make sure we've got liquidity to meet other tax obligations. And then that gets back to things like your investment strategy. Make sure when you sit down and design your investment strategy that the fund does have the liquidity to meet its obligations, whether those obligations be tax obligations or pension payment obligations or borrowing obligations or some such like that. The other thing, which I guess we haven't talked about, but it's probably worthwhile talking about now, is if a fund is going to go into a particular asset class like crypto, or any asset class for that matter, we need to make sure that the fund's trust deed allows for it. So number one, crypto being a bit of a new asset class, not all deeds will necessarily allow for crypto. So we need to make sure that the fund's trust deed allows for it. And then secondly, we need to make sure that as trustees are putting together their investment strategy, they allow for liquidity. They are aware of the fund's liabilities and payment obligations, and they take steps to make sure that the fund's in a position to meet those obligations. So with crypto, you're not necessarily going to want to sell it down, I suppose. And it's a volatile asset class, so it's going to go down, it's going to go up, but you want to make sure that the fund's got liquidity to meet other tax obligations from other sources.
As we understand, crypto assets fluctuates rapidly. So aside from investment, how would the audit and valuation process of crypto asset implicate a member's estate and succession planning?
Crypto, if it's on a reputable exchange, it should be pretty easy to determine what the value is. And obviously, for things like, and we talked about Division 296 previously, all assets in a fund are going to have to be valued as at 30 June more prudently than ever before because of those Division 296 issues. To the point of estate planning and succession planning, I guess it depends on A, who the end recipient is, and B, how they're going to receive that superannuation benefit. If it's going to come to them in the form of a lump sum, then we need to determine whether crypto can be paid in specie out of the fund. If that end recipient is going to take the benefit as a pension, then I guess crypto is going to continue until perhaps the trustees decide whether that's something to keep in the fund. So I guess a couple of key things there. The audit of all assets is more important than ever before, and we've seen auditors become far more stringent with asset valuations. And I think from an estate planning and succession planning point of view, it depends who the end recipient is and how they're going to receive the benefit with regards to not just crypto, but all assets.
So I got a final question for you, Nick. With the heightened popularity in crypto asset class, how likely are we going to see similar or other types of assets in that space appearing and becoming a preferred investment in the future?
Oh, mate, that's a good question. There's always things appearing in the SMSF space. I think, and back to your point about Division 296, we might start to see not necessarily assets within the superannuation system, but to complement the superannuation system. So things like insurance bonds are going to become more popular. Investment bonds are going to become more popular. There's always new asset classes or always new investments appearing on the horizon. Crypto's a huge one, and crypto assets are something that's, I don't know whether we'll see something like that in the future. But you've got things like AI. How's that going to impact on self-managed superannuation funds? We've got that whole ESG piece. Mate, I guess if I knew the answer, I wouldn't be here. I'd be on my big yacht in the Caribbean. So,
Absolutely, yeah.
Yeah.
So those are all the questions I have for you today. Once again, thank you so much for being with us, Nick.
Thanks, mate. Thanks for having me.
Thanks for listening to this Financial Standard podcast. For more information, visit financialstandard.com.au. Please keep in mind that the information discussed in this podcast is general in nature and does not consider personal circumstances. Reliance should not be placed on any content without further independent financial research and advice.